Hi guys, this is SJ speaking, and in today's video, going to see about what is repo rate. So before going to the video, I am personally teaching trading course. So if you want to join my mentorship course, you can contact me from the number which I have given in the video scrolling below. So I am taking 7 separate courses which consist of price actions, fundamental analysis, and master strategy, which is also another technical analysis video such as price actions. So the videos, the courses are separate as well as combined. Also there is that. So there is totally 7 courses. You can enroll in any one of the 7 courses if you are interested. So you can contact me. So now let's go into the video. So what is repo rate? So repo rate means it is the lending rate of the central banks to the commercial banks. So what happens is that if I am depositing around if I am depositing around 10,000 rupees in a bank, and people like me also deposit. For example, there are again there is another 9 people in addition to me. So totally 10 persons are depositing. So totally there is 1 lakh in the bank. But the bank usually takes around 10 to 20 percentage it leaves in the bank, and the remaining amount it usually even gives as loans to the bank. So only around 10 or 20 percentage remains in the bank. For example, take 10 percentage remains, only 10,000 remains in the bank. The remaining 90,000 is lended to as loans, is given as loans. So this is known as fractional banking. So this is what takes place. So why the bank does this? Because uh, the bank does this in the belief that not every customer comes and withdraws at the same time. So 10% deposit, not every 10 of them comes at the same time simultaneously and deposits withdraws all the money. So you 1 or 2 persons might come and withdraw around half of the money that they deposited. So in that belief, the bank does this method. But suppose if there is only 10,000 in the bank, and if there is only 10,000 and some person comes and withdraws 20,000, the banks need some money, extra 10,000. The extra 10,000 is borrowed by the commercial bank from the central banks. So repo rate is the lending rate of the central banks to the commercial banks. So in case of India, the central bank is Reserve Bank of India, and the commercial banks, let's take for example any private sector or public sector banks such as HDFC Bank or State Bank of India. So for example, in this example, I am stating SBI. So suppose if there is repo means many might wonder that is repossession. The full form is repossession. It's not the case. So the full form is repurchasing option or repurchase agreement. So this lending agreement, so the agreement takes place between the central bank and the commercial bank, which is known as repurchase agreement. And the interest rate that is charged on this is known as repo rate. So I will explain in an example. Suppose SBI needs around 10,000 rupees. So it borrows money from RBI. So 10,000. So RBI does not give simply the 10,000 because there is no guarantee that SBI will pay back RBI the 10,000 pay back safely. So in order to assurance safety, a guarantee, the RBI demands a collateral. So collateral only if collateral. So what the collateral, which is the collateral means SBI might have bought some bonds from the government. So government bonds or treasury bills. So 10,000 worth of securities are given as collateral to the RBI, and once the collateral is given, the 10,000 is given to the SBI. So this is actually a sale is taking place. So RBI actually bought 10,000 securities from the SBI in an agreement that SBI will repurchase that securities. So that is what is known as repurchase agreement. Actually, a sale is being done. These securities are sold to RBI in the agreement that these securities will be brought back by the SBI once after it pays 10,000 plus the interest rate charged, which is known as the repo rate. So now the current repo rate is 6.5%. So in this example, if SBI borrows 10,000 means it has to pay back 10,650 rupees to RBI. So in case of 1 lakh or 1 crore, the amount would be more. So this repo rate can be overnight or for term. So if the SBI borrows money today and it gives back the money, pays back the amount to the RBI next day itself, it is known as overnight repo. If it holds the money for more than 1 day, it is known as term repo. So usually now up to 3 years a term repo is allowed. So these are usually short-term loans borrowed, but they can also be mid-term to long-term loans too. So this is the fact. And the repo rate, who decides the repo rate? The repo rate is decided by the central banks of respective countries on the monetary policy meet. In case of India, the RBI, the monetary policy meet takes place, that it has to be taken place at least 4 times in a year. So compulsorily, mandatorily. So in USA, the Fed meet occurs. You might you might wonder what the Fed meet is. So this is actually the case. So the repo rate, the interest rates, this is what takes decisions are taken by the respective governors of the central banks. So this can be increased or decreased accordingly in order to control the money supply in the market. In order to control the inflation or deflation, the repo rate is increased or decreased simultaneously, and it acts as a benchmark. So what it means that if the repo rate increase, all other interest rates in the market also increase, such as the lending rates to the customers, the deposit rates to the depositors, this also increase. So if the repo rate changes, the other interest rates also change in the same way. So this is the meaning of this. Suppose if there is inflation, so prices of goods and service increase drastically. So usually this affects the everyone. So in order to reduce the inflation, in order to reduce the money supply, what the central banks does, they usually increase the repo rate. So once the repo rate increases, what if the bank, commercial bank, has to borrow money from the central bank, it has to pay more interest. So it avoids borrowing money from the RBI. So simultaneously, it also avoids lending to the commercial bank. So this is the central bank. So if the repo rate increases, it avoids completely borrowing money from the central banks. It also avoids lending to the consumer customers, those who need money. So it avoids giving loans. So there is slowdown in the economic growth. If there is slowdown in the economic growth, the companies might lay off the employees. They might reduce the salaries. So the people who are in the work, they might not spend money. They might just save their money. They might not spend money. So the demand for the products and service, it decreases. So since the demand and the products on the service decreases, usually the prices fall down as the demand decreases. So this is how the inflation is reduced, by increasing the repo rate. And this is one way. Another fact is that the lending rate to the customers also increases. Simultaneously, the if the lending rate to the customers increases, no one would be willing to borrow money from the commercial banks. That is one case. Another case is that the deposit rates also increase. The FD rates increase and the savings account rates increase. So if these kind of rates increase, it will attract more people to deposit in the bank rather than spend the money. So the consumer spending decreases, whereas the deposit rate increases. So the people will think we can deposit our money now and we can spend later in the upcoming years. So this is the idea of the in case of inflation. So these are the uh, this is the process that takes place in case of inflation. So in case of deflation, for example, during the corona process, during the corona pandemic, the government imposed lockdowns and restrictions, so no one went outside, and many companies needed to shut down their operations, and the demand for the products drastically went down. So the prices of the goods and service drastically decreases. So deflation also affects the economy in a bad way. In a competitive world where several countries want to come up, in order to increase the economy, in order to grow the economy, what the central banks, in case of India, the RBI does, it has to increase the money supply in order to boost the economy. So what it does, it simply it reduces the repo rate. So what does in America, sorry, in USA, in what they do, the interest rate what was around 0% during the corona pandemic. The interest rate was around 0%. So in America, what they did, the interest rate was around 0%. What the commercial banks did, they borrowed the money free of interest from the Fed Reserve Bank, and they give loans to the consumers, even to the farmers and the small scale businesses. So these kind of people, this is known as subprime loans. So these kind of loans they usually give at 1% or 0.5% or 2% they give, and they make profits. So these people also borrow money at low interest, and they do their business and they make profits, and slowly the economy started to increase. So this is what they do in order to increase the money supply. So this happens in case of deflation. Similarly, people who deposit, they also find the savings rate and FD rates started decreasing, and they find it unattractive, and they usually pull out their money and they try to invest it somewhere else where they could earn money. So this is what happens. So for the repo rate is increased and decreased in order to control the money supply. So accordingly to the inflation and deflation, the interest rates is increased and decreased. So this is what takes place. So hope you would have got a good clarification about what repo rate is. There are several other rates such as bank rate, cash reserve ratio, statutory liquidity ratio, reverse repo rate. I will bring videos on separate topics later. And therefore, in repo rate itself, there is several other videos. I will bring it in my upcoming videos. So my channel is not alone for trading and investing. It is also for other financial. You can also watch banking videos, financial videos, commerce, economics related videos. It will help you guys. So thank you guys. I'll visit you on my next video. So until then, like, share, subscribe, and comment on my videos. It will be a motivation for me. And press the bell icon, all buttons, so you get notified for all my videos. If you want to open a Demat account, I have given you Zerodha link on the video description. And of course, if you want to join my trading course, you can contact me from the number in the scrolling below. So thank you guys. I'll visit you on my next video. Until then, bye bye. I also have another channel, SJ's Trading School Tamil. So if you want to listen to my videos on Tamil, you can watch that channel. So that's so share my videos. So thank you guys. I'll visit you on my next video. Until then, bye bye. Take care.